Time for Business Today's commodity roundup as the recession fears gather pace. Crude oil crumbles amidst uncertainty. Prices hover around the $100 per barrel mark. Crude oil prices are at a 3-month low, tumbling 7% just this week. And it is not just crude that is seeing a rout. Gold too has been losing sheen. Let's head across to Naveen Mathur, Director Commodities and Currencies, Anand, Rathi shares and stockbrokers, to talk about the downfall in the commodity prices. Let's begin. Mr. Mathur, gold prices have declined recently in the last 2 days. What would be your outlook on gold with also the recent hike in the import duty of gold? Is it the right time to invest in this asset class?
So yes, you are right on the point that the gold has been on the declining trend for the last 1 or 2 days. After we have seen a spurt on the gold prices, the spurt was largely because of the increase in the import duty from 10.75% to approximately 15% for the imports of gold to India. I think that particular import hike was largely because to curtail the current account deficit and thereby hold the slide or the depreciation of rupee against the dollar, which the government has taken the stance on. I think as far as the international markets are concerned, we are seeing the prices hovering at around $1,740 means per troy ounce in COMEX. And Indian markets, the prices are hovering at around 50,600 per 10 grams. We have seen prices last week at around 52,000 also in Indian markets. So the trend is definitely neutral to bearish. If I'm saying bearish for a simple reason that the gold prices, or I would say the gold prices are inversely correlated to the currency movement. And in this particular case, the dollar is appreciating because of the Federal Reserve monetary tightening policy and the interest rates hike. The last interest rate hike of 75 basis point was one of the highest hikes we have seen since 1994 June meeting of the Federal Reserve. So I think the monetary tightening is leading to dollar appreciation, and which is impacting the gold prices on the negative side. So 1740.42 is what the dollar rate is quoting on the COMEX at this particular moment. If you ask me on the outlook, as I said, is neutral to bearish. Bearish to an extent that we feel that the gold prices, which are hovering at around 50,600 levels, might go down to approximately 50,400 to 50,300 levels for a very short period of time. The first support level is 50,500. And the next is at around 5350. So I'm maintaining a view of around 49,500 to 50,000 per 10 grams for the gold prices in a short term, which is a month or so from here, from about 50,600, which it is quoting currently on the MCX.
Now, as the crude prices hover around the $100 per barrel mark since April, how is this shaping up and how will the impact be in India in the medium to long term?
So the crude prices going down definitely have the positive impact on our country, because we import about 75 to 80% of our consumption of crude from the other countries, and therefore with the rupee depreciation and so much high value of the imports, definitely it will have a positive effect if the prices are down. And you rightly said the WTI is quoting at around 100. It has touched below 100 also today sometime, but then it is quoting at around 100, and the Brent is at around 104 or so. So I think Indian markets too have behaved that way. It is just that the rupee depreciation has been holding the Indian prices on the MCX futures contract for July at around 7,800, 900 levels per barrel. But otherwise, the impact would have been much better if the rupee would have not been depreciated against the dollar. So this week, we have seen the crude oil prices slipping by around 8%. There are concerns with respect to global recession because of the tightening of the monetary policies across the globe. There is also a concern about inflation being high, and therefore the stagflation kind of scenario, which might be seen in due course of time. So I think overall trend, therefore, is slightly negative for the crude at this particular moment. If you see even the highest numbers of COVID infections in May, since late May in China, again developing some kind of a concern of the economy not being doing too good after the recent zero policy lockdowns we have seen in China. So that zero COVID policy is somehow can be seen impacting the Chinese growth. And China is one of the largest on the imports for crude and the other metals. The inventories have been high. We have seen the crude inventories. The API reported that the crude inventories are holding above 3.8 million barrels, which is expended, not the depleting inventory. So that is also a negative for the crude oil prices. So I think overall the scenario on crude is kind of around 100 to 105 for the WTI. If nothing negative comes in from Russia and Ukraine, and we feel that the prices in the short term may remain to these levels, but slightly positive with China announcing a stimulus package of around $220 billion to support their industry. So overall trend, mild bullishness from here, but $105 to $106 levels would be something the WTI can be seen in the short term.
All right. Thank you so much, Mr. Naveen Mathur, for joining us on this broadcast.
If you like the video, do like, comment, share and subscribe.